What's up, everybody? How are you? How are you? How are you? So today we're going to be talking about the market maker models by ICT. Again, we're going to talk about how I use them in my own trading and how you are going to use them for once I start, walking through, some trades on the Telegram channel, through my voice notes, as I mentioned on the Telegram channel. Yeah. So let's get started. Yeah. All right. So now when we're talking about the market maker models, right? So as you all know, okay, we have only two models, a buy model and a sell model. Okay. So we have the sell model there, and then we got the buy model right here. Okay, now let's just go through some of the basics, right? So just to simplify things a bit. Now we all know that the smart money reversal happens at a higher time frame point of interest. For example, let's say an order block. Okay, so we have an order block, a fair value gap, liquidity void fill, then you have the breaker, you have the mitigation block, then you have buy side liquidity. Okay, all of these over here trigger some measure of a market maker sell model on some time frame. All right, over here we have the same thing where the smart money reversal is going to be at one of these levels of liquidity. All right, now when we're talking about the market maker buy model and the market maker sell model, what we are looking at is we are looking for price to take out liquidity in the first place. Okay, in the first place, price must take out some measure of liquidity and then go into a fair value gap, fill in a void, go into an order block, go into a breaker block, go into a mitigation block, and then only cause a reversal. Yeah, so on the way up, now when we're talking about a market maker sell model, yeah, on the way up you will see that there's going to be price action that doesn't really mitigate the broken range. Okay, so we're looking at two stages of these ranges, right? So they are the stages in which you're going to be witnessing some measure of reaccumulation taking place. Yeah, and as price is reversing, it's going to use or it's going to reuse that previous point of reaccumulation for the redistribution phase. Okay, now what's the requirement for me personally, right? When we're looking at reaccumulation phases, they're down close candles. Okay, here also it's a down close candle, so the down close candle led to a move up. An order block, now you all know what an order block is, right? One that either filled a gap or raided liquidity. So you're going to find that candle. Yeah, that candle is the place, or that range with that candle is the range in which there was reaccumulation. Okay, you can see there are two stages of reaccumulation. Yeah, that third stage where, or rather the first stage over here where price reversed to go higher, yeah, that is your liquidity pool of target. So that's your supposed original consolidation. Yeah, so that's your sell side liquidity pool that you're going to be targeting. So now we can say that, okay, there are multiple market maker sell models happening on multiple time frames, on the 1 minute chart, 5 minute chart, so on and so forth. Okay, so your job is to choose the one with the greatest amount of range, or rather with the greatest range. So if let's say you're talking about maybe you want 30 pips, so wait for a 30 pip range to form. Yeah, and then sell accordingly. All right, now what's an easy way of looking at this? Well, simple. You're going to be looking at SMT divergence at the highs, and when price takes out that previous point of reaccumulation, you're going to be looking to enter. You're going to be looking to use all your models inside of this redistribution phase. Now price is going to seek what? It's going to seek either the open, high, low, close, or the 50% of this previous area of reaccumulation. And once you see the willingness to move away from this area, you're going to apply your models, your order blocks, your fair value gap entries, your lower time frame factors of a breaker, mitigation block, all of that. Okay, you're going to be using those PD arrays to look for a short. Okay, likewise over here when we're on the way up, right, we understand that, okay, over here, right there on the top here, this is where you're going to be finding your buy side liquidity pool. Now what's the qualifier for this buy side liquidity pool? Well, you have this buy side liquidity pool and you want to see two levels of redistribution to the downside. Yeah. Now why two? What's the magic number behind this two, right? Because when we're looking at a range, we can see multiple up close or down close candles on the left side. In this case, where we could possibly see multiple up close candles on the left side. Okay, if this is truly a market maker model, yeah, if you're looking at less than 3 stages of redistribution, in this case, if you're looking at less than 3 stages of redistribution, it means that this run down was low resistance. It's manipulation. Yeah, yes, there's some redistribution that happened over here, but it's manipulation. So after the manipulation, we're looking for the reversal. And that's the market maker models. All right. You are entering inside of the creation of a new range. That is a market maker model. Okay. That is a market maker model. Now I'll give you a tip after this. Now when we're going higher, we are trading above the what? The bearish order block. Okay, the up close ranges. You're going to be seeking your models inside of that, inside of the open high low close of that range. Likewise, as we trade above this guy also, you're going to be looking for an entry there. Now what if price doesn't give you an entry and this trade goes for buy side liquidity? Simple, this trade is not there. Okay, model worked, the model worked, but this trade is not there. Simple, just don't worry about it. Okay, there's always going to be another opportunity if you really know what you're doing. Okay, so down close ranges, they are going to be used as areas of redistribution, referencing the open high low and close, here also, until price reaches sell side liquidity. Okay, likewise over here, up close ranges that we used, or bearish order blocks over here that we used to go lower, to reprice lower, they're going to be used as areas of reaccumulation. Okay, they're going to be used as areas of reaccumulation. All right, so that is a theory. Okay, now here's an interesting trick or tip, I'd say trick and tip, okay, that you can use to identify these market maker models. Now when we are looking at the 4-hour chart, right, you want to identify 5-minute market maker models. When we're looking at the 1-hour chart, you want to identify 1-minute market maker models. When we're looking at the daily chart, we want to look at the 1-hour/15-minute market maker models. Okay, so if it's a 1-hour model that's taking place, okay, it's more or less going to be the weekly expansion. Okay, if it's a 4-hour one, it could be the monthly, or again another weekly expansion. If it's the 1-hour chart transposed onto the 1-minute chart, that's going to be what? A market maker buy model or sell model on the 1-minute chart that will transpose to the body of the 1-hour candle. Okay, so it is quite important to note the 1-hour opening price and the 4-hour opening price and look at these things accordingly. All right, so that's that. Okay, you all know now, inside of these areas of redistribution here and inside of these areas of reaccumulation, you know what to look for, right? An order block. Whatever accumulation fractal that you're used to, right? When I talk about, okay guys, I'm looking for an order block to form here, that's just me saying, okay, I'm looking for an order block to buy from or sell from. Then your job is to look at price, see whether you agree with me. Is this a model? Is this not a model? Is there all of the are all of the supporting factors there? If they are, press buy, press sell. Take profit, up to you. Maybe I'll just say, okay, I'm looking for this high to get traded, I'll take partials here. That's not a signal. You can do what you want. I'll just walk you through it whenever I'm free. Okay, and also you can use this as backtesting material as well. Okay, all right, so let's have a look at price. Now look at Bitcoin. So yesterday on Bitcoin I took a sell, so I missed the buys from here. There was a sell over here, but this sell, it took its own cool time. All right, but here is the framework. Again, the framework is as follows. On the 1-hour chart, let's go to the 1-hour chart first. All right, so let's go to the 1-hour chart over here. I have no idea what just happened, so I'll probably edit that out. Okay, so we'll go to the 1-hour chart there, and what we'll do is we are going to look for a model. So remember, if it's a 1 hour chart, we're looking for a down close to be violated so we can trade lower. Okay, over here, can we see anything? We cannot. Go to the 30-minute chart. Over here, do we have anything? We don't. We don't really have anything here on the 30-minute chart as well. All right, so what are you going to do? That's the biggest question. If I don't see a model here, right? If I don't see a model over here, I'm going to go to the 15-minute chart. Okay, on the 15-minute chart, can you see this down close right there? Yeah, for it to be viewed as an area of reaccumulation, price needs to trade above it. It didn't do that. So can I do anything here? No. Okay, here what can I see? Well, down close, price trades down, fails, goes higher, so that's not a model. Then let's see here, what happened? We trade down because this down close, what did it do? It filled in this wick, that's a gap, so this is an order block. Price trades down below it here. So what's our reference points now? The close, the 50, the low, and what? What's this? The open. Okay, these are our reference points. That's an area of reaccumulation. Okay, if this is an area of reaccumulation here, right here, where's my previous stage of reaccumulation then? The previous stage of reaccumulation is where? Here. Why? This filled in this wick and price goes up. Okay, or we can say this one because it's all the same, it's all within this down close, right? So what can we say? We can say, okay, fine, this entire thing is a range of reaccumulation. So we're going to use the same reference points once price trades below what? This low. What's our ultimate target? This low. For this model, this low is my ultimate target. Yeah, okay. See, I traded something else, of course, from the mentorship, but using this framework, look here, sell, take profit. Okay, okay, all right, that's one thing. Now if you just go to the NASDAQ, all right, if you go to the NASDAQ, so look at this, right? So this was what I sent on the Telegram group saying I took part in this move. Look at this. Now if we are looking at the 4-hour chart, right here, 10 o'clock opening price, right? Look at this. From the 10 o'clock opening price, I am viewing all of the time frames below the 4-hour chart. 1 hour, I'm going to be looking for a down close. Do I have anything? No. Only thing is over here. 30-minute chart, do I have anything? No. Why? This is not an order block. It is not. Okay, look, it failed in a redelivered rebalance, but there was no extra move up over there. 15-minute chart. Here, this 15-minute chart, right? I want to see, was this down close actually an order block? Let's check. 5-minute chart. What happened? This range did what? Reacted from a bullish order block. So it is one. 10-minute chart. What happened? This range comes and fills in this redelivered rebalance. It is a order block. Okay, now knowing that this is an order block, what are our reference points on the 15-minute chart? Well, the high, the open, the close, and what? The low. From there, we're looking at the 50. Right here. Okay, right. So now that we have our areas of reference, yeah, when price trades below this low, okay, can you see how we have another stage of reaccumulation here? How is this a stage of reaccumulation? Well, as you all know, right, as you all know, a wick, a bullish wick, a bullish candle that has a wick is basically a down close candle followed by an up close candle. So this down close candle portion over here, right, it gets violated there. and price uses that again and sells off. Okay, from here you can see how price goes up there. Now if this is our last stage of reaccumulation, first stage of reaccumulation, the reversal was a liquidity pool. This is the liquidity pool. Okay, that's the liquidity pool. Right, it's because it was Friday, it did not follow through. Okay, note this, the 10 o'clock opening price, so that is the 4-hour chart opening price, 4-hour candles opening price. Price goes up. Okay, it goes up. Is there any model over here that suggests, okay, can I buy? No, not on the 15-minute chart, at least over here. Over here, once this takes place, you know that the next possible move that you're going to be anticipating is an expansion below this 10 o'clock opening price, and you're going to seek all of the liquidity pools below this 10 o'clock opening price. So here, maybe you can even take profit inside this gap. Okay, if you look at the 5-minute chart, just to see, do I have any model over here going for me? Yeah, do I have anything? Well, we go down below the opening price, fill in this gap. Yeah, what's my next move? My next move is, for a buy model, we have to trade above up close candles. This up close right there, what did it do? It filled in this minor little gap over here. So is this a bearish order block? Yes. So looking at this entire range from there to there, there's a mini buy model here. This is the take profit. That's as simple. It's a very small trade. Okay, but you can go one step further to the 1-minute chart, and you can trade inside that range. Yeah, so you go down below. Okay, this is that low, lower low. So what's the up close that we need to see violated? The up close range, this. Why? Because this up close and this wick filled in whatever is over here and came into this order block. Okay, so here to here, that's your interest. So you want to see price go above it, tap it, and you can buy. You can have a tighter stop loss, and you can just target this high. So it'll probably look like something like this. So you can buy inside of this, stop below this gap here, and something like this. Now, if you're in sync with higher time frame POIs, you would know that there was a POI up over there, was a rejection block, I believe, or it was a wick. I think it was a wick as well. So you could have gone somewhere like this, something, maybe a 1:3 minimum, something like that. Okay, all right. So that's how you would go about doing it, guys. Now, your homework right now, right? So when I eventually come to the point in which I'm going to walk through some trades with you all on the public group, I will be doing it with a 1-hour framework. Okay, now if I'm doing it with a 4-hour framework, I'll let you all know, okay guys, I'm doing it on a 4-hour framework, but majority of my trades are going to be based on a 1-hour framework. Okay, if you just take a look at Bitcoin now, just to have a look before I end the call, end the session, end the video, what am I saying? So used to doing sessions, I call it sessions. Okay, here what do I see? Now I can see we have an up close range right there. But first of all, I want to see, is there a higher time frame in which there's an up close candle, right? Go to the 1 hour, don't have. 4 hour, don't have. So 30-minute, also don't have. Okay, but what do I have here? I have a wick. So what is a wick? Up close, down close, that led to a move down. Okay, I want to see whether this wick had any part to play in filling up a gap. Yeah, 15-minute chart, oh yes it did. So this is a bearish order block. So we saw it on the 30-minute chart as well. Therefore this is a 30-minute model. Okay, so if this is a 30-minute model, okay, if this is a 30-minute model, you can see how price goes up, comes back into the range, and then starts to go higher. From there we can do this. Okay, now with this wick here, let's look at the high, open, or rather the low of the wick, and it's 50 because now it's a wick, right? So we don't look at the other part of the body. So here, what is price reference? Wow, reference is the 50% of the wick. Yeah, from there, if this is my last stage of redistribution, this is my first stage of redistribution up over here, yeah, inside this wick. Yeah, and where's my liquidity pool? My liquidity pool is an X swing high, so I'm looking for price to try and find its way up over here. That's all. Now, what if it doesn't do that? If it doesn't do that, then we are in a higher time frame. So we are in a buy model instead of a higher time frame sell model. So then it's your job to see, okay, what is price trying to reach for? If it's going to go lower, what is price trying to reach for? Let's see. Over here inside of this previous day's range or the previous day's price action, if you look at the 4-hour chart, can I see any fractal of a sell model? Well, I need to see down close candles being violated, right? So what do I have? I have, oh wow, I have this one. How about that? So I need to be careful, right? I really need to be careful, because what are the reference points now? This one, this one, and what else? Right there. Okay, yes, I can take part in buys, but I need to know, right, that it could be severely limited, because look at the reaction over there, right? So we can have this buy model just to go to a POI. Yeah, so this is what I mean by, okay, buy model inside of a sell model. So yes, you can take partials over here and you can see where the price can go up here, right? But the time to be trading is from 2 o'clock onwards, regardless of whether it's a weekend or not. Okay, so you would disregard this price action and wait for the correct time of day, because everything can look correct on inside of the wrong time of day and it'll still not work out. Yes, it worked over here, but will it continue? Unlikely, because it's not the right time of day. Yeah, so you can have a buy, you can keep your take profit here, but by now you need to be at break even and you need to take partials up over here. All right guys, well, with that said, that is my take on the market maker models. I hope it does help you out. So remember, we are looking at the areas of reaccumulation and redistribution based on reactions given to us by a valid order block. Okay, that's going to be our stage of redistribution or reaccumulation, basically from either side of the curve, or basically the left side of the curve, depending on whether it's a buy model or a sell model. Okay, so always remember we have two stages, there, liquidity, okay, and then the opposite for a buy model. All right guys, okay, cool. Now if this video doesn't, if it's not high quality, right, I don't know why, I'll check and see. If it's not high quality, then I'm sure y'all can see it, right? Go back to your Bitcoin charts, Saturday 4th of February, Sunday 5th of February 2023. Yeah, play this video along and mark up the charts alongside what you're seeing. Okay, yep, so that's pretty much it. So the next video should be about something interesting as well that y'all can use. So I'll talk about that in the Telegram group. If y'all have any questions, hit me up. Don't forget to follow me on Instagram, join the Telegram group, and mentorship is there for guys that want it. If you want to go deeper into the study of time rather than price, to make sure everything is in alignment with what you do. All right, cool guys. So with that, see you in the next one. Good luck and good trading. Bye bye.